Hi, this is the lecture for Class 2 in the Monday, Wednesday, Friday classes. So hopefully you have found the notes. They're out here in Blackboard. It's a great idea to have them as you listen to this lecture. I'm going to follow the notes. I'll probably add a little bit here and there, but I'll certainly go through the notes and you will be able to fill in the blanks. All right? It's up to you whether you want to print these out and fill them in, or if you want to have them maybe on a tablet or in the background and fill them in. You know, you could listen to the lecture, stop, fill in the notes. Probably a lot of different things you could do. Hope you choose a way that helps you learn. Another thing you might want to be aware of is this PowerPoint I'm about to show you is out here. I don't know that it's valuable to you to open it up and have it running while I lecture. The notes have all the slides on them. But it is out there if that's something that will help you. I hope you will use it. One last thing, hopefully you've already read pages 1 through 11. If you haven't, go read them. Come back, I'll wait. All right, so let's get going. This class is about accounting in the business environment. So we're going to take our overview and talk about accounting in general and learn a little bit about who does accounting and who uses accounting. All right. I think it always helps to know what's in it for you. Why is accounting important? So maybe that'll make you want to learn it. Accounting is the information system that measures business activities, processes the information into reports, and communicates the result to decision makers. Accounting is the language of business. Understanding the language of business helps you in your career and when making business decisions. So this language of business, all of us, no matter what your major is, assuming you go to work for an organization of some kind, you'll need to be able to talk about profits. Even if you work in marketing, you might have to talk about sales. You'll have to definitely talk about expenses. You'll be talking about all of the things we learn in this class wherever you go work when you leave here. So it is a language of business, and understanding it is going to help you understand your job better when you get out of here. All right, so accounting is important because it helps people make decisions. We accountants are the people who gather all the information about what's going on in an organization, and we organize it. We put it into categories. We format it into reports, and that makes it easy for people to understand. All right, so they can make decisions. All right, who are these decision makers? Well, accounting has 2 broad categories, and these categories are based on who uses the information. There's financial accounting and managerial accounting. Financial accounting provides information for external decision makers like outside investors, lenders, customers, and government entities. Managerial accounting focuses on information for internal decision makers, such as the company's managers and employees. So 2 broad categories of accounting. Financial, which is what we're learning in this class. You're going to learn financial accounting. Managerial is for 2302. I hope you'll like it. So financial accounting is about gathering the data that tells us about how successful the company is in terms of profits, basically. We accountants who do financial accounting are going to gather the information that people outside the company want to know. People outside the company who are making decisions about giving the company a loan. People who are making decisions about buying stock in the company. Maybe they're deciding whether or not to sell them something on credit. All right? If you are going to make a large sale to a company and you're not going to make them pay you in cash, you want to make sure they can pay you in cash, so you'd want to see their financial information. That's what financial accounting is about, the financial information. Managerial accounting is for the managers. just like it sounds, right? They, of course, need to know if their company's profitable. They need to know what expenses are being used, but they also want to know things about quality control. They want to know things about efficiency and effectiveness of operations. So there's some slightly different reporting that goes on for management accounting, and we'll learn about that next semester. Now, financial accounting provides information for external decision makers. Individuals use accounting information to make decisions such as how much money to save for college or to purchase a new computer. Business owners use accounting information to set goals, measure progress towards those goals, and make adjustments when needed. Outside investors have an ownership interest in the business and often provide money to get a business started. A creditor is any person or business to whom the business owes money. And taxing authorities collect taxes levied on a business's income or assets. So these are all users of financial information. The accounting profession. Now there are a lot of kinds of accountants. All right. Certified public accountants are licensed professional accountants who service the general public. CPAs work for public accounting firms, businesses, government entities, or educational institutions. To become a CPA, you must meet educational or experience requirements and pass a qualifying exam. You can visit the AICPA website for more information. If you're thinking about becoming a CPA, for sure come talk to me or another instructor here in the accounting department. We'd love to help you down that path. Certified management accountants are certified professionals who specialize in accounting and financial management. Generally, CMAs work for a single company. Visit the Institute of Management Accountants IMA website for more information on becoming an IMA. Accountants generally work either in public, private, or governmental accounting. So we categorize accountants by who they work for and what they do. So CPAs have that public in their very name, certified public accountant. So that means they're out there in communities. Typically, you'll work for an accounting firm and you hire out to various companies. Maybe you audit, maybe you do tax services, but you'll work for whoever is going to hire you. Management accountants typically work within a company. So the Celanese plant down the road has operations going on, and they need to track those operations and make sure everything is running efficiently down there. And they have management accountants that are keeping track of that. Public versus private versus governmental, just like it sounds. Public accounting, you're an accountant who's out there, will work for anybody. Private means you're working for one company. So when I used to work for the bank, I was working for a private company, even though it wasn't actually private. You could buy stock in it. It's just that I work for that one company, so we say I'm a private accountant. Or governmental accounting. I don't really do accounting anymore. I teach accounting, but I do work for the government. Accounting here at the government is kind of different. So you have people who specialize in governmental accounting. So the people over at the main office where you pay bills and things, those accountants, they're governmental accountants. So the kinds of positions that you could have as an accountant, there are a lot of positions. Controllers, they work typically within one company. A controller works in one company, and that person is typically going to be what you would call a private accountant. Financial analysts review the financial data. So as we learn our financial accounting, you'll learn what it means. And if you became a financial analyst, you would be able to understand what those financial statements mean, and you could make good decisions, advise people. Systems analysts. Those are information systems people usually, and they set up accounting systems. They think of the best way to do the accounting or whatever information system needs to be set up. Tax accountants, that is actually a form of law. All right, so we're going to learn financial accounting. Taxes are set by laws, right? The IRS code. So tax accountants help people navigate tax laws. And auditors, that's what I used to do. Auditors help review companies, and they gather together financial statements and they go through the company and they say, yes, you compiled these financial statements correctly, or oh, there's an error here. So auditors go through companies and check up on them, so to speak. It's kind of a fun job. Get to get in their business. Cost accountants typically work private accountants, and they probably have cost accountants down there at the Celanese plant. Many places that manufacture have cost accountants, and they help analyze the accounting at a manufacturing firm. And a paraprofessional or a bookkeeper, those tend to serve a lot of clients. I tend to think of people like that, maybe they keep the books for several doctors' offices. There are people out there who are professionals, doctors, lawyers, but they don't really want to do accounting. So they hire what we'd call a paraprofessional to do their bookkeeping. So if you're following along on your fill-in-the-blank notes, studying accounting and becoming certified professionally can lead to a financially secure job. Tax accountants, auditors, and paraprofessional bookkeepers tend to service multiple clients and work in public accounting. Controllers, financial analysts, and cost accountants tend to work for a single company and work in private accounting. Other accountants work in federal or state governments. And of course, people cross over. I am what's called a certified internal auditor, so I actually worked doing audit for just one company. Okay, now we're going to move on and learn a little bit about the organizations that govern accounting. All right, so who makes these accounting rules? I mean, that's what accounting is all about. It's about following the accounting rules and creating the financial reports according to the rules. So, well, who comes up with these rules? In the United States, the Financial Accounting Standards Board, FASB is what it's called. So if you go out in the world and you hear some accountants talking about the latest rules from FASB, they're talking about the Financial Accounting Standards Board. It's a privately funded organization. It oversees the creation and governance of accounting standards. The FASB works with governmental regulatory agencies like the Securities Exchange Commission. The SEC is the U.S. governmental agency that oversees the financial market. So you got two things going on here. All right. Financial accounting is about keeping up with the finances of a company, and that company puts out financial reports. All right. So in order for these reports to be useful and to compare them, let's say you wanted to compare Coke and Pepsi, right? Not how it tastes, but how well Coke, the organization, is doing compared to Pepsi, the organization. Well, you need some financial statements. That's great. But you need Coke and Pepsi to prepare their financial statements the same way, otherwise you can't compare them. So in order to make sure financial statements are all comparable, we have these organizations that come up with the rules and enforce the rules. Excuse me. So FASB, the Financial Accounting Standards Board, makes the rules. So as we start into this class and I start telling you rules about accounting, recognizing revenue at a certain time, well, that's a rule from FASB. The Securities and Exchange Commission, that is the government regulatory agency that regulates stocks, bonds, things that you trade on the exchanges. So they very much care about having correct financial statements. So FASB comes up with the rules, Securities and Exchange Commission enforces the rules. All right. What rules are they enforcing? That's a great question. Well, generally accepted accounting principles are the guidelines for accounting information. We call this GAAP. GAAP is governed by FASB, and GAAP rules are used to prepare financial statements. The primary objective of financial reporting is to provide useful information. In order for information to be useful, it must be relevant and have faithful representation. When information is relevant, it allows the user to make informed decisions. Information is faithfully represented when it is complete, neutral, and free from error. So, GAAP, you're going to hear a lot about this in your accounting career if you have one of those. GAAP stands for Generally Accepted Accounting Principles, and those are the rules. FASB, that organization we just talked about, FASB makes the rules for the most part. We'll learn a little bit more, but just for the most part, just understand the rules for how we do financial accounting. The rules for financial accounting are established through this set of rules we call a GAAP. Now, in order to make these rules work, we have to make some assumptions up front, right? So we can apply them to every entity, all right? So first of all, a thing we're going to assume is that we're dealing with an economic entity, something that stands alone. An economic entity is an organization that stands apart as a separate economic unit. An entity is a separate economic unit when it is separate from its owners. There are various types of business entities. A corporation is a type of business separate from its owners in a variety of ways. So we're going to talk about these ways an entity is separate. A corporation has legal corporate formation with the appropriate state, continuous life, and ease in transferability of ownership. No mutual agency, so stockholders cannot commit the corporation to a contract unless the stockholder is acting as a manager on behalf of the business. Stockholders have limited liability for the debts of the corporation and separate taxation. So an important thing to understand about accounting for organizations is, as we do our accounting, they're separate. The organization we do the accounting for is separate from the owners. So let's take an example like Walmart. All right. So Walmart's what we call a public company, and it's a big company. People own stock in it. Maybe you or somebody you know owns some stock in Walmart. All right. Well, so those people who own stock, they own the company, and they all have, jobs and assets and houses and things like that, but that's all totally separate from Walmart. So when you're doing the accounting for Walmart, preparing Walmart's financial statements, it stands alone, right? That's what we mean by an economic entity. We don't lump in all its owners with it. It's totally separate legally, so that means if Walmart does something good or something bad, it's on its own. Continuous life, so Walmart can go on forever. Obviously, people who own Walmart stock don't go on forever, but they can transfer that Walmart stock. No mutual agency. So just because you own stock in Walmart doesn't actually mean you speak for all of Walmart. You can't tell anybody, I own Walmart, but I don't speak on behalf of Walmart. Stockholders have limited liability, and that can be good. Walmart's probably not in getting any trouble anytime soon, but sometimes companies do go bankrupt, lose money. If it's a corporation and you're just a stockholder, they can't come to you and try to get that money out of you. You don't have legal liability. Corporations are separately taxed from their owners. We're not going to do much about tax in this class, but just keep that in mind. Corporations separate from the people who own them. Now, there are lots of different kinds of organizations. All right? Corporation is just one. All right? We're going to talk about a few others, but for purposes of this class, most of the time we're going to deal with a sole proprietorship or a corporation. We're going to talk mostly about corporations because we're going to kind of assume their stock, right? Not all corporations are huge like Walmart, you know. There are a lot of small corporations that are closely held. But we want to talk a few different business categories, all right? One is sole proprietorship, a business with one owner. So, you know, if I decided to go out and open a restaurant, and I just go down and I rent a building and start cooking and start selling some dinners and some lunches, it's just me, sole proprietorship. Partnership. A lot of accounting firms are set up as partnership. When you get two or more people who they're not organized as a corporation. So sole proprietorship is a business with a single owner. A partnership is a business with two or more owners, not organized as a corporation. A lot of accounting firms organize that way. Corporation's a business organized under state law that's a separate legal entity. And a limited liability company is a company in which each member is liable only for his or her own actions. So there are a lot of different ways to organize companies. In this class, pretty much we're going to be talking about corporations, right? Because they tend to have to prepare financial reports for people outside of them. Sole proprietorship, yeah, they probably do want financial reports from time to time, but the reality is they don't need financial accounting quite as much as the corporation would. So that's probably what we'll focus on for the most part. So we need to understand how corporations work, right? Stockholders normally receive one vote for each share of stock they own and control the corporation with their votes. Stockholders elect the board of directors, which sets policy for the corporation and appoints the officers. The board of directors elects a chair and designates the president of the corporation. Corporations have employees in various positions. So this is sort of showing you how corporations work. Corporations are those companies, could be big or small, but they're owned by several people and there's stock that can be purchased. Sometimes the stock is sold on an exchange like the New York Stock Exchange, and lots of people own them like Walmart or Target or Wells Fargo Bank. Big organizations. Now, stockholders own the company. They get to vote. They're the owners. Now, obviously, for a company like Walmart, there's thousands and thousands of owners, so it's not like they can be there every day to run the company, so they vote for a board of directors. The board of directors, they pick a chairperson and pick a president, and those people go on to sort of run the company, hire employees who actually do all the work. So that's how corporations work. So there'll be people doing work. The stockholders are the owners of the corporation. So let's talk about a few more rules that govern accounting. GAAP provides the rules, right? So we've talked about generally accepted accounting principles. They include the cost principle, the going concern assumption, and the monetary unit assumption. So there's a lot of GAAP rules, but these underlying assumptions are something we want to understand up front. So first, separate economic entity. When we do our accounting, we do it just for that entity. Next, there's the cost principle. The cost principle states assets should be recorded at their actual cost on the date of acquisition. Assets will continue to be reported at their historical cost over their useful life. The going concern assumption assumes an entity will remain in operation for the foreseeable future. So it's not about to go out of business. And the monetary unit assumption states that transactions are recorded in dollars because a dollar is the medium of exchange. Accountants assume the dollar's purchasing power is stable. So these assumptions help us compare all financial statements to previous financial statements, to other companies. If we say, okay, everything's getting recorded at their actual cost. Because you know what? Quite frankly, sometimes you could purchase something for less than, its market value, or more than its market value, but you're not going to record those market values. You can't say, oh, well, I got a really good deal on this car. It's a $50,000 car, but I bought it for $30,000. You can't put it on your books for $50. You have to put it on your books for $30. That's what that means. What you actually pay for something is what it goes on the books at. That makes sense. Going concern assumes entity will remain in operation for the foreseeable future. That makes sense too, because think about it. What if you were doing accounting for a company that was bankrupt and going out of business? Well, is that company going to pay off its debts? Maybe not all of them, not at their face value. So those debts that are on the books aren't going to be worth what they say. Their assets, maybe they're going to have to liquidate them. Maybe if they had time to sell all their inventory, they could, but they're going to have to liquidate it. They have like a going out of business sale, sell everything real cheap. So if you're doing accounting, you have to sort of assume that, hey, this place is going to be around. We're not liquidating things. We're going to pay our debts. So that's what we call going concern. And of course, monetary unit, you just state things in terms of value. Got to have a dollar figure on it. Because sometimes you don't necessarily pay dollars for things, but we're going to translate everything into dollars. All right, the rules that govern accounting. There are some rules that you have to apply. Now, in this class, we're going to pretty much focus on GAAP rules, U.S. GAAP. Other countries have GAAP too. But there are a few others. Just be aware, future classes, that kind of thing. There are other rules. Most companies report accounting data using GAAP, but companies doing significant business in other countries may report using the international global standards that are called International Financial Reporting Standards, IFRS, or you'll hear a lot of accountants call them IFRS. IFRS, which are published by the International Accounting Standards Board, IASB. GAAP standards are rules-based, whereas IFRS guidelines are principles-based. So we're going to follow GAAP, so we're going to learn rules. Pretty simple. You just memorize the rules, apply the rules. Another thing you might want to know. An audit is an examination of a company, financial records, and statements. An independent auditor issues an opinion on the state of the company's financial situation. So auditors are out there in the world checking up on the accounting, making sure those companies are being ethical and reporting them according to GAAP, that they're not just making up some stuff. Due to various accounting scandals, the U.S. government passed the Sarbanes-Oxley Act, which is abbreviated SOX. You'll hear people talk about SOX, which is intended to curb financial scandals. According to SOX, it is a criminal offense to falsify financial statements. So, SOX is the law that came out in 2002, right after the Enron accounting scandal, and it was meant to stop some of these bad actors from doing things with financial statements. So there's GAAP, which are the rules for accounting, and there's laws like Sarbanes-Oxley that makes people follow the accounting rules. All right, so that takes care of the lecture for class number 2. I want to remind you to make sure that you do your homework. You need to bring with you to class 2 S1-1 and S1-5 from your book. After you've read the text, pages 1 through 11, watch this video, filled out your notes, you're going to do the homework. Now, if you have some questions about the homework, you're welcome to text me if I'm your instructor, or call me or come by my office hours. I'm always glad to help. If you're working on your homework and you get a little bit stuck, you know, all the homework is in your Pearson My Accounting Lab. So you could go to Pearson My Accounting Lab, and for S1-1, you could click on S1-1. And in the My Accounting Lab, it has little videos, little hints, all kinds of stuff that can help you work your homework. So if you get stuck on any homework in the class, I suggest go to that Pearson My Accounting Lab, because all the homeworks are out in there too. Now you have to bring out a hard copy of your homework. You can't work it in the Pearson. You can work it, but it's just not, I won't keep the grade. You have to bring it to class to get it graded. So do that. And remember, in class we're going to work a problem. So after you work your homework and bring that to class, we're also going to do in class E118 and E119, and the last page of the notes is a page you could print out and bring with you to class to work those in class. But we'll be working those in class together, so you can hopefully get all your questions answered in class. So remember, in class we're not going to redo the lecture. What's going to happen is, if you had some question as I was reading it, you're going to bring that question to class and we're going to talk about it. And then we're going to work problems together, so that way you'll be able to get a little more use out of me, right? Because I can explain this on video, you can watch it all you want, and in class I can help you work the problems. All right, well, good luck with the homework. See you in class.